Hello and welcome to another session of the My Solo 401k Financial, My Community YouTube webinar series. We're excited today to discuss how to upgrade a Vanguard or Ascensus Solo 401k to make Roth and or mega backdoor Roth contributions for 2024. So with that stated, as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you're on YouTube, please like, please subscribe. Please like, as that helps us to get the word out to other solopreneurs, self-employed individuals just like you. Please subscribe so you get notifications of when we go live. We go live every day on our community, on our YouTube channel. You can come and ask questions. So if you do have questions, please chat those over, whether you're watching on YouTube, LinkedIn, StreamYard, Twitter, etc. Please chat over questions or topics you wish to discuss, and we'll go through those right now. Now, we want to lay the foundation with some basic understanding. So in terms of the solo 401ks, the eligibility to set up a plan, it's for self-employed individuals with no full-time, non-owner, non-spouse employees. Now, the scenario we're discussing today is going to be somebody that already has a solo 401k at Vanguard or maybe now at Ascensus, right? Because they transitioned the plans over from Vanguard got out of the business and sold their book of business to Ascensus. So now if you previously had a Vanguard solo 401k, now it's at Ascensus. Or if you recently set up a Vanguard plan at the end of last year, they would have directed you to go over to Ascensus. So the situation we're talking about is somebody that already has a Vanguard or Ascensus solo 401k that they set up before the end of last year. And now they want to still make Roth and or mega backdoor Roth contributions for 2024. So that's the scenario we're talking about. So if you filed an extension for your self-employed business tax return for 2024, and you already have a solo 401k that you set up at Vanguard or Ascensus before the end of last year, there's good news, which is that you could still upgrade your plan to our plan and make Roth and or mega backdoor Roth contributions for 2024 all the way up until your business tax return deadline, including any timely filed extension here in 2025. So we're going to talk about different scenarios. The first scenario we're going to talk about is somebody whose business is taxed as a sole proprietor. So again, if you had set up the plan with Vanguard or Ascensus before the end of last year, and you filed an extension for your 2024 tax return, so in the case of a business that's taxed as a sole proprietor or an LLC taxed as a sole proprietor, that means that you report your self-employed business income on your 1040. So if you filed an extension for your 2024 1040, that means that your 1040 deadline is October 15th. And it's since you set up a plan before the end of last year, like in this scenario, you could still upgrade your existing Vanguard or Ascensus solo 401k to our solo 401k, which now allows for Roth and mega backdoor Roth contributions. And therefore, you could still make Roth and mega backdoor Roth contributions for 2024 by October 15th. Now, let's say that your business is taxed as a partnership or an S Corp. If you set up a plan with Vanguard or Ascensus before the end of last year and your business is taxed as an S Corp or a partnership, and you filed an extension for your 1120S or your 1065 in the case of a partnership, that means that you would have until September 15th to upgrade your plan from Vanguard or Ascensus over to our plan which would now allow you to make Roth and mega backdoor Roth contributions for 2024 all the way up until your extended tax return deadline, September 15th. And then lastly, if your business is taxed as a C corporation and you had set up a plan with Vanguard or Ascensus before the end of last year, and you filed a timely extension for your 1120, well, now you would have until October 15th to upgrade your plan at Vanguard or Ascensus over to our plan. And then you could still make those mega backdoor Roth or Roth contributions for 2024 by October 15th. So if you can meet both of those requirements, you set up a plan with Vanguard or Ascensus before the end of last year, you filed an extension for your 2024 business tax return, you can still upgrade the plan to our plan here in 2025 and make those Roth and mega backdoor Roth contributions, because now your plan, our plan, would allow you to do that by the extended tax return deadline. Now, what's the process to upgrade the plan from Vanguard or Ascensus to our plan? Well, it's referred to as a restatement. So what is it not? It's not setting up a second plan with us. Really, your existing plan, your pre-existing plan will continue, but now it'll be governed by our plan documents. So I think of that as a cut and paste. So you cut out those existing plan documents that you had through Ascensus, and you replace them with our plan documents, which are now going to govern the plan. Now, you'll have to open up new accounts because the accounts at Ascensus, from their perspective, are governed by their plan documents, which would have been replaced with our plan documents. And Ascensus won't open up accounts for third-party plan documents. So you'd have to have accounts somewhere else, for example, at Fidelity or at Schwab. But we'll help you open up those new accounts for the restated plan at the bank or brokerage of choice, such as Fidelity or Schwab. And you would need multiple accounts. For example, if you're going to have pre-tax, Roth, and voluntary after-tax funds, which is how you make mega backdoor Roth contributions, you would need 3 accounts for the restated plan. But again, we'll help you open up those new accounts at the bank or brokerage of choice. We'll help you transfer the cash and assets over. Well, Ascensus, as a matter of fact, will require that the transfer is done by cash. But we'll help you transfer the cash over from your pre-existing account for your plan that you had at Vanguard or Ascensus over to the new account, for example, at Fidelity or Schwab, wherever you choose, for the restated plan. Now, that transfer, that's not reportable. It's not taxable because it's just going from one account that was opened up for the pre-existing plan to new accounts for the same plan, but the new accounts are now just governed by the new plan documents, meaning our plan documents that we used to create the plan, the restated plan for your self-employed business. All right, hopefully that helps. Thank you so much for checking out today's webinar. If you found this to be helpful, please like. That helps us to get the word out to other self-employed individuals just like you, right? There's a growing number of self-employed individuals, and this information could be really instrumental to them as they secure their retirement accounts, right? They secure their retirement funds. So if you like, you subscribe, share with others that might find it helpful, that'll really help to get the information out to them. So we do appreciate that if you're able to like and subscribe. Great, we got a question. We're a new My Solo 401k client using Schwab as a broker. I and my spouse are participants and trustees in the plan. Can you please explain why the account structure with Schwab is all master accounts and no participant accounts? How do I know which pre-tax account to use for my funds versus my spouse's? So that's the process that Schwab follows to open up these CRA accounts. Ultimately, Schwab is just providing the accounts that are governed by the third-party plan, meaning our plan document. What's necessary is to have separate accounts for each participant. And then if each participant is going to be having multiple types of funds, then each participant would have different accounts for the different types of funds, whether it's pre-tax versus Roth versus after tax, which is how some folks will end up with having 6 accounts, right? Because if you each have pre-tax, Roth, and after tax, that's 3 for each of you for a total of 6. Now, as far as knowing which account is which, ultimately, again, Schwab is just providing the accounts. And what's most important is that the accounts are used consistently, right, for that same person or for that same type of funds. So what a lot of folks will do is they'll just nickname the accounts. So nickname one is being for John, nickname the other one is being for Jane, and then maybe you say John pre-tax, John Roth, John after tax, and then Jane pre-tax, Jane Roth, Jane after tax. Because ultimately, what's most important from a solo 401k perspective is just the accounts are used consistently for each purpose. Thank you so much for bringing the question. We appreciate it. And thank you, of course, for your business. Myself and my business partner are opening up a new account. We are the only 2 people in our business. We're each opening our accounts, but under the same business. When setting up our accounts, should we select just me or 2 participants on your form? So I'm understanding that you're submitting the initial application. If it's one business, but there's 2 owners and each owner is working in the business, reporting their own earned self-employment income, then it's just going to be one plan, one fee, but you're going to have different accounts for each person. So in that case, when you're submitting the application, you list one person at the top, then you list the additional information like the email, the name of the business. Then we have another question down below asking whether a spouse or business partner is also going to be participating. So you would say yes, and then enter the name of the other individual. So again, that'll be one plan, one fee, different accounts for each person. Each person will be listed. They'll need to be listed as a trustee on the plan documents, etc. So thank you so much. We appreciate the opportunity. All right, well, that's awesome. Thank you for the great participation. Again, if you like the video, we'd really appreciate that. Helps us to get the word out to other self-employed individuals, other solopreneurs, other freelancers, just like you. There's a growing number of individuals like that. So it's really great if we could get the information out to others because they'll probably find it to be helpful. Hopefully they will be at least. So, all right, well, please continue to engage. We'll be back on Monday with another video. Oh, you got a clarifying question. Go ahead. We'll be back next week with more videos. And always, you can find us 24/7 on our community. We have a vibrant community with over 30,000 members, posting forums. There's videos. There's other webinars. There's a library of videos and webinars. We've got the industry's first AI, solo401k.ai, which is a great way to find answers to questions and resources quickly. So you can use it for free at solo401k.ai. So please feel free to check it out. All right, here's the follow-up question. After I put the second participant in on my form, there's another form field where I have to choose whether I'm enrolling as just me or 2 participants. My partner sees the same on her form. Which do we select? So I'm trying to see here. Let me pull up your email. One second. I'm getting you from the registrants list here. One second, please. Oh, I see. So, you must be looking at the next steps questionnaire where you're telling us where you want to have the accounts at, etc. So if you're both going to be participating, then you would you would do it for both of you. So you're probably choosing like Fidelity, or Schwab or wherever you want to have the account because you're looking at the next steps questionnaire. So then you would choose 2 participants then. Please choose 2 participants. Okay, so if that's the case, what you want to do is submit the form twice. So you would do just me for one and put one person's name. You can add notes when you're submitting the form. You would put one person's name. Then you can submit the next steps questionnaire and choose, say, fidelity, right? And then submit the next steps question. In that case, you would just do just me because it's going to be just one person at fidelity. Then you would do another person's name, or you can submit the next steps questionnaire again, use your email, but then add the other person's name in parentheses or somehow just add that when you're submitting the information because it's free form fields. You can add additional content and then put just me for that person, but choose Schwab. So you can have participants can have accounts at different brokerages. Yes. One person can submit it and then the other person can submit it. But it looks like we only have one person's email address. So you're going to want to use the same email address each time so that we can identify the plan. But you could submit the next steps questionnaire twice. Exactly. Submit it twice. Do just me, choose fidelity, add in the notes somehow, add notes when you're submitting and put that person's name so we know, okay, that person wants fidelity. Then submit it again, choose Schwab, choose just me, add in the notes that it's the other person's name. Thanks so much for your patience as we sorted that out. Appreciate it. All right, wonderful. All right, we appreciate all the great participation. Thank you so much, everyone. Until next time.